Hey guys, welcome back to the channel. So it's another one of those days. The market's down another 2-3%. Yesterday when the futures were up, I did not get relief from that because I'm kind of getting a feeling of what this market's like. It's kind of consistently happening, but like every professional investor throughout history has done, you dollar cost average, you look at the market, look on this graph, you see where it's come from, you see where it is. In between, it had many 10%, 20%, and some over 50% drops. But at the end of the day, if you're in your high conviction names, you believe that they are going to be more valuable looking out 5 years from now, then you just look at this as an opportunity. Do not let your emotions get in front of everything, because those are the ones who get hurt at the most. So I want to today actually discuss Cathie Wood and her strategy. I mean, her fund has been getting wrecked for the past year, but I want to show two short clips from her in a recent interview that she's done, and it's really her reconfirming her convictions, and one of them is really her getting into the ARK strategy. And I want to comment on this because I think the first is something that I tend to agree with, although not fully, maybe in the timeline. And the second, I think it's a strategy, how to go about this market and any market, and how to kind of try to profit on the shorter term volatility. Please like and subscribe to support the channel. Now let's get into the video.
And you've got an inflation fear out there, which many people think means higher interest rates. And interestingly, long-term interest rates are not confirming that, by the way. And we do believe inflation is transitory. I know that's become a bad word recently, but we believe people are going to be shocked at how low inflation goes this year. We're going to see negative year over year in many, many categories. Today's retail sales report proves that out.
So we see in the first clip that Cathie is again reinstating her opinions that inflation is only a temporary thing. It is going to pass, she thinks, in 2022, and we're really going to enter a deflationary environment because innovation at its core is deflationary, because all it does is bring down the costs. And obviously, if this would occur, then it would take a lot of pressure off the Fed in them continuing to raise interest rates and their quantitative tightening. And this is because, I mean, a lot of this is in reaction to the inflation because of all the money supply that's been pushed into the system since the start of COVID. And really the markets right now, I mean, they just don't know what to expect going forward. We clearly saw the Fed backtracked on them talking about inflation being transitory, and now it's not. So they're raising rates, or they're planning on, we don't even know how many times. It could be 4, it could be more this year. And this really is creating a lot of the downturn in the market. But she's saying that, Cathie is saying that if it is going, in her opinion, a deflationary period, then that obviously should be good for the markets, and especially innovation, because they're going to be at the forefront of all of this. I do tend to agree with Cathie. I don't know the time frame. I mean, innovation is a deflationary thing. It definitely brings down costs. That's at the core of technology. But I mean, there's still supply chain issues, and there's still a lot of issues kind of going on in the global environment, Russia and Ukraine, etc. And this many times could create that spiral effect to where the market is already now down, I mean, close to 15% on the NASDAQ. But when you look out, and us retail investors, we have time on our hands, right? We don't have that client who is looking at their portfolio, calling the manager and being like, why are we down so much? And I might take my money out. So they can't take the risk of, yes, being down in the next year or whatever it is, but because we're putting it in companies that 5 years from now will ultimately dominate, and we see that. And we have to remember Wall Street's short-sightedness and not understanding of innovation, which Cathie is saying. If I take example of GM, like the amount of love that is given to GM when it's ultimately a company that has no technology. They made a deal with Trevor Milton and Nikola, which was total fraud of a company, and they did it really to piggyback off the hype that was going on with Nikola at the time. But to actually come out and make a deal as a Fortune 500 company is unbelievable to me. And that in itself should make Wall Street analysts like steer clear of that. And it makes it, and then also how the CEO talks total BS about what's going on with the company. But Wall Street just, they don't know. They look at the value and the PE, and that's the end of it for them. So I really do think that they don't understand innovation. And it's not shocking to me that things like Enron and Theranos take place, because it just continuously, they seem oblivious to the long term, to what's really going on around them. And this makes me believe that I don't know when. I mean, I don't invest in ARK because there's a lot of positions that I wouldn't want to invest in. I like to pick particular stocks, but when it comes to innovation, I believe her because I see the change going on around me, and the fact that Wall Street's not on board with that doesn't scare me at all, because I can see the way they act over the past 5 years that I've been in the market, and I'm sticking to my long-term conviction list. Tesla is my number one position. I bought some today, bought some on Friday, and I will hope that it continues going down, because I'm looking 5-10 years from now what it's going to be in terms of its revenue and profits. I am extremely blown away. I think Wall Street does not understand it. So I'm ultimately just getting a deal. It doesn't matter what the short term is, because I'm not planning on selling anyways. I look at it in terms of share. How many shares could I own before the market reverses? The more, the better. So that's what I think when it comes to innovation. I don't know when the reversal. I don't know if it's the deflationary period in 2022, like Cathie is saying, but I do believe that technology is definitely deflationary in nature. Now, I want to watch a short clip where Cathie talks about ARK's strategy, and it actually is a strategy that I take. So it's not investment advice, but I will discuss the strategy to benefit really from this market and kind of any market.
Yes, the first thing I want to say is volatility is not always a bad word. In fact, in a bull market, volatility is your friend. Certainly that was the case for us in 2020. The reason it has become a bad word is since the tech and telecom bust, we have seen every bear market accompanied by an increase in volatility as measured by the CBOE's VIX. And yet, because so many people in the business joined after the tech and telecom bubble, they do not remember that we have seen volatility move up in up markets for extended periods of time. And I think we will go back there again. I think 2020 was a glimpse at that. And we use the volatility to our advantage. We know that disruptive innovation is controversial, and with controversy can come volatility. We believe that our research points us in the right direction. And so if a stock is down 10 or 20% in the short term because of some earnings result where a company decided to invest more to innovate, and was punished, we will be buying a stock like that. So we use the volatility to our advantage. And very often you'll see that trading around volatility adds significant alpha.
So Cathie talks about volatility in the market being a friend. Volatility is not necessarily a bad thing. And I tend to agree with that. And the way I use volatility to my advantage in today's markets, and really I've been doing kind of since I started, is I have two portfolios, first of all. So I have my long-term and I have my short-term. And I'm going to take Tesla as an example because I do it the most with Tesla. If right now Tesla drops, right, to $800, what I do is I am okay with almost buying almost whatever amount because of what I believe in Tesla, but I buy a few of my long-term portfolio, and then I also buy my short-term portfolio. But in the short-term portfolio, if Tesla has a little bounce, then I will sell out a bit, and I'll continuously doing that. And if it, let's say, drop from 800 to 750, then I'll just, again, buy more in my short-term and more in my long-term. And the short one, there's always bounces. So I'm taking advantage of those bounces. And sometimes if it gets really low, then I'll buy more and more in the short term. And then if there's a 5-10% move over the next few days, I would sell out, but I'm continuing. And the reason why I'm okay with this, and it's the short term, I'm not afraid of that short term trading, losing everything, is because I only do it with my high conviction stocks. So I'm okay with, technically, if I bought it in the short term portfolio and it dipped, that I obviously don't want to sell out, then it just means I have more shares for the longer term, which I'm totally okay with. So I basically take advantage of the volatility with my long-term positions. I have a few of them, and these ones I also buy in the short term. And this is ultimately what Cathie is saying. And the most important thing is, obviously, if you're doing this strategy or looking into it, you have to factor in taxes, because, I mean, if you're selling for a short-term gain, you have to pay taxes and higher taxes. So thank you so much for watching this video. I hope it was helpful. Please let me know in the comments if you have any questions, any other videos that I can do. It's a very crazy time in the market, so I'd love to make more videos on my perception and everything that I see going on. And see you in the next video.